Comparison of RRSP, TFSA, FHSA, let's do it. The contributions for both RRSP and FHSA are tax deductible, which means each year the amount of money that you transfer to these two accounts will lower down the taxable income for the year, therefore reduce the taxes you need to pay. On the other side, the money that you transfer to TFSA are after-tax money, which means that you already paid taxes on it, therefore there's no tax deductible for TFSA. Any withdrawals made from RRSP are taxable, meaning that you must include your income for the year. However, there are two exceptions. First, HBP, Home Buyers Plan. This allows you to withdraw up to $60,000 tax-free for the purpose of buying your first home. But you do need to remember that you need to pay back over 15 years, starting the second year after the withdrawal. Second, LLP, the Lifelong Learning Plan. This allows you to withdraw up to $20,000 tax-free with a limit of $10,000 per year for education purposes. And you also need to pay back over 10 years time, starting the 5th year after your first withdrawal. Similarly, any withdrawals made from FHSA other than the purpose of buying a home are taxable, which means that you must include into your income for the year. On the other hand, any withdrawals made under TFSA are tax-free, meaning that you do not need to include into your taxable income for the year because you don't need to pay taxes on it. Both TFSA and FHSA allows you to earn investment income tax-free. On the other hand, it is tax deferred under RRSP, which means that you do not need to pay taxes in the year that you earn investment income rather than paying taxes in the year of any withdrawal. The contribution limit for RRSP is 18% of prior year earned income with a maximum of $33,810 for 2026. And the contribution limit for TFSA is $7,000 for 2026 and $8,000 for FHSA. Under TFSA, any withdrawals you made in a year will increase your contribution room the following year. However, this option is not available for RRSP and FHSA. The contribution deadline for both TFSA and FHSA is December 31st, 2025, but the deadline for RRSP is March 1st, 2026, meaning any contributions you made to your RRSP before March 1st will help lower down your taxable income for 2025, therefore reduce your taxes for 2025. Both RRSP and TFSA allow us to carry forward any unused contribution room indefinitely, but under FHSA, there's a limit of $8,000 that you carry forward to the next year. There's no lifetime contribution limit for both RRSP and TFSA, but under FHSA, there's a $40,000 maximum that you can contribute in total for a lifetime. CRA states that the age limit for making contributions for all three accounts all start in the year that you turn 18. However, the last day to make contributions for both RRSP and FHSA is on December 31st in the year that you turn 71. So overall, RRSP is more beneficial for people who have a higher tax bracket, as any contributions made to this account will lower down your taxable income for the year. Therefore, it creates tax savings. On the other hand, the TFSA is more beneficial for people who have a lower tax bracket or have significant tax deductions, as they have more money per dollar to invest compared to people who have a higher tax bracket without significant tax deductions. And last but not least, if you're a first-time home buyer, FHSA is a great tool to save for down payment, but you do need to remember there's a lifetime contribution limit of $40,000. So please like, subscribe, and leave a comment down below of what else you want to see. Bye now.